equation. This is the reason we are here, no? And that's why we are doing these webinars.
Hi, can I ask you a question here in this chart?
Of course.
If you were to take, let's say, a long trade on the bottom of this range, would you consider this minor resistance here problem for the market to reach then this upper target? Would you like to prefer a close above this level to confirm your long trade, or you just take the trade around this level on the daily?
Understand. If I'm not entered the support level, I will wait for safety close above the level, then a daily confirmation in order to reach the resistance level. Otherwise, if I am in a trade, in a long trade at the support level, this one, I mean 0.9621, will be definitely a money management level. I mean, I will make initial partial taking profits, waiting for the price to close out, do a retracement, and giving me a new opportunity to add something to the original or to remaining positions. Obviously, this pitch is available even in bearish trend. I mean, if the price close below it, do a retracement, and then you will have a bearish confirmation on daily charts identifying the support level as target. You can do it just because the 0.9621, for the fact that in the past showed us the fact that it was a strong support, obviously is a reliable level to it retracement, and obviously bearish information daily charts. I will show you always the most, the simplest way to make some trades. Obviously, here we have an important pattern. We have head and shoulders. So we have a first entry after the price is retracement to the neckline. Here it is. We have. That's why I said at the beginning that we have two very important concepts: information and confirmation. The information is that mean to the doji. Please correct me if I'm wrong. This bullish doji. Because on February 17th is another one. It is just a simple bullish candle. But we had firstly an information. The fact that the candle didn't close below in range market. So at this point I'm expecting to see if the buyers, because the candle that doesn't close below the range market support doesn't close below our level gives us information of sellers weakness. The sellers are not able anymore to close below the level. This means the buyers becomes to be strong. The doji was a second information between the battle, the fight between the buyers and sellers at the support level. I mean, in this case, with head and shoulders forming at its support level, it is always safe to wait for clear information, because otherwise you will risk bearish evolution in order to complete and confirm your bearish head and shoulders. I mean, without a very clear information at this static range market, without a clear information, you will risk to make a trade against this head and shoulders, and obviously you have a higher risk trade. Have you ever tried 1 year time frame or 10 year time frame for price study? I remember I was looked to a chart like this, and I found that it's reliable too. I remember that I gave the glimpse on a chart. I remember was GBP USD and Euro USD, if I will remember, and I know that I've seen that the levels were very strongly, very reliable too. But obviously this means you have less levels, less trade opportunity, and I know that I'm not a great fan of over trading, but you can imagine that or how much you have to expect for the price to reach a level identified on 1 year time frame, or worse on 10 years time frame. I mean, you will have the price that retest the level once on 3 or 4 years. It is absolutely impossible to trade obviously, for the sake of the study, it is very interesting to study them. Yes, yes, you're right. Okay, back to the simplicity. I was saying that we have first bearish information of this head and shoulders when the bearish candle close below the trend line. It obviously acts as a neckline. So all you have to do, I mean, I repeat, we have two very important, very important concepts: information and confirmation. Information is what we are reading on higher time frame. The confirmation is the price action candle after, underline after, the higher time frame information. This is the safest way. I will ask you just a minute, please, and then I will answer to touch trade. This is the safest way to trade. Waiting for the information, reading the information, reading the price, then once you have the information, waiting for the daily confirmation. This is very simple. So we have the sellers that close below the neckline. This is information. All you have to do from now on, all you have to do is waiting for price action, bearish price action at this very strongly confirmed. Obviously, we have a very important level at this 192.43. If the price will close below it, it will be and will become one of the most important levels to wait for a retracement in order to take another trading decision. Here it is. The price is closing. The price close below it. All you have to do is waiting for a retracement and a confirmation of daily charts. Let's see how the price acted and behaved at our level. Here it is. Close below, put a retracement, and we have a 2 days pin bar. Very strong information, very strong bearish information. The price close below, make a retracement, and then we have a bearish continuation. Unfortunately, we hadn't a bearish price action in order to allow us to make an extra trade. But look how the price reacted, look how the price respected our levels. It's very simple, very clear, but the most important is the safest way I know. It is very safe, it's very sure. Okay. Where the price is going, because obviously we have to know where to make a decision. Obviously, during the years, my experience led me and into a next webinar. I will show you how simple sometimes is it to trade. Obviously, not always. Sometimes to trade with no level, just with a naked chart. Why? Because it will be the price itself to tell you when to go out, when to close a trade. It will be the price itself that will give you the information you need to make money management. You are in a short position. As long as the price will do lower low, lower high, all you have to do is adapting your money management to the market structures. All you have to do is reading the price. If you have bearish information, all you have to do is putting your stop loss behind the market structures. Candles, swings, range markets, or pattern. Repeat, it will be the price itself. Let's think logically, simple and clear. If you have a short position, if you see double bar high, lower close, bearish outside bar, or any bearish information, you want close the position. But if at a very, very important level you will see, I don't know, a strong pin buy, a strong bullish outside bar, you will see a strong double bar low, high close. If you will see a range and then the price is close above and restart in bullish direction, this means from a technical analyzed point of view that the price start doing high lows. This means you are not anymore in a bearish condition. You have to take a money management decision. You close, I don't know. This is a very personal thing. But what is the most important? If you think that it's time to close, if your analyze says you that you are at a very, very important thing and it's time to close it. This it works for you. If you say, okay, this happens, I don't know, on weekly charts, but we have enough space and my account allows me to let more space for trade, or the inversion is not a directly one and I'm expected to an eventually retracement in order to regain, to take back a part of this space from a retracement, act it. But be sure you are doing in a very conscious way, in a very responsible way, but especially it have to be, and it have to be based on a price reading. It has to be based on a technical reason. You read the price and take a decision based on what you see on the price, on obviously reading the price. In this case, we have an information. This information is head and shoulders, obviously being a pattern. We are able to measure it. Here it is. A target. This is the head and shoulders pattern. Look how the price respect our target. Look the reaction at the level. Doesn't mean, I have to be honest, and I always we say this, if the price will reach a pattern target, doesn't mean the price will stop or will make an inversion. No, it is just a pattern target. Is not the price target. Attention. It is just the pattern target. This is just a level where we know that the price will react. We have the confirmation that the fact that the price will react. This means we have to be aware by the fact that we have to take a money management decision. Whatever will be. But we have to know that the price will react, and we have to be ready to make a decision. Please, if you have any question, please, don't be shy. Yes, USD, I mean American dollar against the Canadian dollar. I will say also something that maybe you'll be surprised. I don't know, maybe yes, maybe not, but I see the price heading to 1.2777. Let's be more. Yeah, I will keep this. Level, even if for simplicity, prepared just for simplicity. We could consider very well as well 128. It is I'm saying this? It's very, very simple. I know I talk a lot about range market. I know. I always speak about this market structure, and I'll continue to do it because the range market is the most important of the all markets structures. Statistics say that almost 80% and definitely more than 70% of each time the price is doing range market. So the most part of its activity, the price is doing range market. This means the most part of our time when we are analyzing a chart, we have to analyze range market. This means in an automatically way the range market becomes the most important to read it, and most of all to learn it. Here it is. We have a range between 1.28 and 1.9437. Here it is. We have a bearish swing, a bullish swing, and a bearish swing. Again, this means we have double top. This means we have a range market. Now we are seeing the price that it start from its support level and it's going to its resistance level. That's why I think that in the future we will see the price that goes to resistance. Most of all, we have a very effective, a very simple, a very effective way the price starts a bullish trend. Here you go. Head and shoulders. Here it is. Why do you think the price is standing now?